Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning and getting ready for what will be sort of a midweek break as we go from Monday, Tuesday to the Wednesday bank holiday, and we pick it up again Thursday, Friday. You know, it's been a long time since I can even recall having a midweek bank holiday. And a lot of traders are asking me, Rog, what should we expect? And I'll tell you, because we still have OPEX to come, think of it as just a break. Think of it as just a long lunch break. Yes, some traders might choose to go flat on some short-term positions midweek and then pick it up on Thursday, Friday. But I actually do not see this as a major interruption on the way to OPEX because all eyes are still very much on the options expiration. And let's face it, it's not as if we're ending Monday's session going into Tuesday's session without direction. We're absolutely looking at clarity of direction. This is the continuation of the S&P moving higher. This is the continuation of the NASDAQ moving higher. So there's no question mark looming over the market in terms of whether or not the NASDAQ and the S&P, largely led by tech and semiconductors, has a direction. And it's amazing how confusion and chop tend to walk hand in hand. When we don't have chop, when we have certainty, when we have an uptrend, it's a lot easier to hold over a weekend or hold through a bank holiday Wednesday. So I'm not really looking for a lot of disruption there. Now, not everything is in an uptrend. Not everything has got that clarity. So it's partly our job as traders to say, well, I'm not going to paint the entire market with the same brush, right? These are all different behaviors. Financials are not in an uptrend. In fact, in this area between around 41 to 41.30, I would expect a little resistance to come in. Financials are not in an uptrend. When we take a look at something like healthcare, healthcare is not in an uptrend, although it's trying. It's a little bit more bullish. It's bullish chop. So not everything is in that clarity. And when you take a look at the NASDAQ, it's going to benefit most from that clarity, from the strength of the uptrend, from the clarity of the uptrend. Secondarily, because of its weighting in tech and semiconductors, S&P will also benefit, but it's being held back in some ways based on the sort of chop we're seeing in financials and the chop we're seeing in healthcare. Now, the index that's benefiting the least from all of the above is the Dow. Not that the Dow is in a downtrend, but it's nowhere near the clarity of the S&P and the NAS. So really what I'm trying to emphasize here is when we are looking at building a watch list, not everything looks good. Not everything is of equal quality. Not everything has a trend. And when we ask ourselves, well, why is the Dow not participating in the uptrend that the NASDAQ is most clearly leading? Because financials, because of energy, right? So when you start thinking from a top-down perspective, index sector stock, things start to make a whole lot more sense as far as why they're doing what they're doing. And then where we do want to put our attention. And where we want to put our attention are the same places we always want to put our attention. Where are the trends preferably up? They are out there. There's not that many of them, and it's mostly tech, but that's where we can definitely focus a lot of our attention. All right, so with that being said, let's go ahead and jump into the questions for the morning. Feel free to type them on in. Let me know what you're looking at. What's the symbol? What's the time frame? Are you bullish? Are you bearish? Do you already have a position you're looking for some trade management? Let me know, and we'll take a look. All right, first up, good morning, good morning. All right, RCL. Hey there, John. All right, so RCL, it's Royal Caribbean. And again, starting with structure, right, John? If we take a look at the two rows of colors here, they have been bullish momentum and bullish trend. Now notice the momentum kicked in and gained traction on the 2nd of May. The trend did not kick in until nearly 2 weeks later on the 17th of May. So remember, bullish momentum is one thing, but if momentum persists, eventually we could turn into an uptrend, which is what we did. Now, the difference between trading a bullish momentum but neutral environment, which is largely bullish chop, or I do want to be a buyer, but it may not have the same follow through, After the 17th, my expectation for continuation is far higher. My expectation for higher highs and higher lows is far higher. So now that we have the trend and we pull back as of the 14th, right? And we can see there the 17th. So Friday and Monday, we pulled into the mean reversion. Now, this matters a lot because in the context of a trend, this is by the dip. This is a mean reversion. This is a retracement where the expectation is for continuation. If I'm in chop, I'm not going to be of the same opinion. In fact, if I'm in chop, as you can see here, do you see how the lines of the green, yellow, red, the lines, these lines right here stopped? When they're no longer there, there's nothing to react to. There's no mean reversion to discuss. In the context of a trend, that's when I want this indicator to tell me, yeah, Rob, that's a viable pullback. So that's where we sit on RCL. John, thanks for the question. All right, PF asks, wondering why Intel and AMD are not participating in the semiconductor rally. PP, the why questions for me, I don't give them any thought, to be quite frank. I'm sure there's a myriad of reasons, but at the end of the day, they are. So the energy that I'd be trying to figure out why laggards are lagging is going to be energy I'd rather spend on looking for dips in NVIDIA, Taiwan Semi, Qualcomm, ASML, Micron, AMAT, LRCX. I would just say off the top of my head, not everything in semiconductors has to move together. If AMD and Intel are struggling, it's a very similar narrative, and it might be because of NVIDIA's strength, but I haven't given it a thought, to be quite frank. I'd rather focus on what is trending and then, start to formulate a plan in those places where I have an edge. All right, next up, Honeywell, beautiful trend that just started up on the 13th. And yeah, I would look for a pullback buy. So Honeywell is just a fresher version of what we just looked at with John's question on RCL, which is we have an uptrend, and if we can get a mean reversion, I'm your huckleberry. So I agree, George. I would definitely look at the long side of Honeywell. All right, from our Simpler Essentials room, we have a question on eBay. All right, so eBay was in a trend, and this is a great way to think about something that was trending. Imagine you're going down the highway, foot on the gas pedal, you cruise it along at the speed limit, of course, and your foot lets off the gas pedal. Do you stop? Do you turn around? Nothing. You just coast, but you're coasting in the direction of the acceleration. That's a lot like when a trend wobbles out of the trend. It's not as if it's a reversal. It's not as if it's a downtrend. Instead of accelerating, we're coasting. We're still going in the same direction. So what I would say with something like eBay is I would not be as thrilled with a mean reversion setup. However, I certainly want to be bullish. And this is where something along the lines of my secret squiggle at the midpoint, which is oftentimes support, and this Darvis level sitting at 51, call it 90, would be a level to keep an eye on for the long side. All right. And that's the way I would look at eBay. And that's pretty much what the 14th did. It started heading down towards that level. Now, the difference between trading on the 14th and trading on the 15th is buying a call with bearish momentum is far less costly and a whole lot easier than buying a call when we've already launched off that level. So when I talk about this specific level, that's the level. Let's call it 5185, right? That's the level at which when price is at that level, maybe give or take a nickel around it, right? When it's at that level with the bearish momentum, that's when I want to be buying the call. Maybe it's a 50 or 51 call, but that's where I want to be buying the call. I want to be long, not at 52.20 or 53, but at that 51, at most 52 area, as close to that support as possible. So that is eBay. All right. And if you're looking at straight calls, yeah, it really depends on where you bought it, right? If you bought it yesterday on this way up, you're really then, and I don't know where you bought it, my friend, so I'll put out both scenarios. If you bought it on Friday on the way down to support, you got a good deal. You didn't pay a whole heck of a lot, and you should be actually nicely in an unrealized profit position as of yesterday's session. If we buy it on the upper half of yesterday's session to see a realization of more profit, we need to see more buyers north of, say, 53.20. So that's why that difference, the momentum and the specific spot that we buy the option in. Again, I don't know where you did it, but if you did it close to, oh, there it is. You did mention, thank you. You just mentioned I got it on the 34. Beautiful, beautiful. So what did you do? You're sitting in an unrealized profit by waiting for that 34. So fantastic, Ghost. Good stuff. All right. Thanks for the detail. That gives you an idea of what you did. So again, what Ghost did is say, look, the 34 is there. The Darvis is there on the sell-off or early yesterday while there was still proximity to that level, got in that position. Beautiful. Nicely done. All right, NVDA. It's still a bullish stock. I did a video called Sanity Check, and you can find it at the Simpler Trading YouTube channel. And in Sanity Check, I got into a very detailed discussion about a lot of the downside targets that seem to be with a lot of vigor being discussed. I'm talking downside targets in S&P like 5,300, 5,100. Pretty mind-boggling considering where we are, that we would even go there. There's, of course, a potential catalyst that would be if the Federal Reserve backs off the rate cut narrative or completely unforeseen geopolitical events. But that's not a trade, is it? I'm waiting for aliens to hover over Manhattan to get my 5,100 target, not a trading plan. However, anything's possible. Well, let's take that to NVIDIA. NVIDIA, going into the split, we know from earnings to the actual split date on the 6th, enjoyed a tremendous retail-driven uptrend. After the split, that Thursday, Friday, Monday, Tuesday, a little bit of a pullback. And the historical pullback in a stock post-split is about 5 to 10%, 5 at a minimum. 10 usually is about the maximum, and NVIDIA did about 7. Once that pullback is done, NVIDIA had a trend that reorganized after the announcement of the split. So it was trending for the better part of those weeks. Actually, it was trending for the entire part of those weeks before the split. So what's it going to do now, post-split? Fall apart? Or is it going to rely back on the narrative that started the trend in the first place, which is, yeah, we're going to split, but the chips are very much in demand. NVIDIA is not struggling. Earnings were not poor, right? So we're going to continue on with the trend. So I think a lot of times if we're expecting too much of a pullback, we're going to miss the boat. And some of the pullback conversations that are being had are really minor crashes that people are looking for. And, good luck with that. But NVIDIA would sit in that same camp of, hey, we got our pullback, and now let's get back to what it has been doing, which is the trend. All right, what about Dell? Okay, I've got a couple of questions on Dell, the last few, and I'm kind of perplexed by the interest in Dell, to be quite frank. But, I might be missing something, which is entirely possible. But when I look at Dell, here's where I say, thanks, but no thanks, Dell. First of all, if I have NASDAQ flirting with all-time highs, I want to see stocks that are moving like the broader average, right? For example, if I see the SMH punching up to higher highs and I don't see participation from Intel or AMD, or I don't see participation from Texas Instrument, I know that it's not necessarily going to benefit from the narrative of that larger group. So when I look at Dell, I think of all the things I could trade, why this? It's clearly not benefiting from the overall move higher. The best I could say is, actually, there's nothing there's nothing that actually is setting up based on my system. And that's a really important thing too. Someone else might have a plan for Dell, but if I stick with my system, which I believe in, I will say this. The only bullish thing I can think of right now on Dell, I don't want to be a short seller, mind you. I don't want to be a short seller because a trend that the acceleration was up. So now we're coasting, right? So what I would say is if we can enter this gap vacuum, right, get above 144, I would look for at least about half the gap for our initial target. And let's see if Dell can't close that earnings gap. That's about the only thing I can see here. But of all the things I could put my money in, and here's the bottom line. Sebastiano, you might have a position, and again, this is where I don't know. You might already be long Dell from 120 100, right? So this is just follow through for you. That I do not know. But there's nothing right now that I can do, not knowing if you have any of that going on. If someone were to ask me, Dell, 142.03 on June 18, what do you do? The best we can do is maybe lean on a gap close. All right. Eventually, Fed will reduce rates. Sure. Yes, I agree with that. Is VBK, Vanguard's small cap growth, a good entry point at this stage? Not for me. No. If I'm looking at small cap, I'll usually gravitate towards IWM anyway, but I would be a little hesitant with this. Number one, small caps are not benefiting from even the expectation of rate cuts. So remember, the rate cut doesn't have to happen. In fact, for any of the indices to benefit from the rate cut, they should already be showing signs of expecting it. In other words, if we're expecting something and it's widely known, right? The rate cut scenario is not a well-kept secret. If we have a symbol like RTY, where we all know rate cuts are potentially coming and it's not benefiting, it's not going to. It's something else is needed to compel traders of small cap, whether that be BBK, IWM, or Russell Futures. Something else has to be compelling because clearly the rate cut narrative is not necessarily what's driving this. So I would say no. I would say no. All right, what do I think about Amazon for a swing trade? Consumer discretionary has been messy. Amazon is extremely messy. If we can get a yellow or a green candle in the gray zone, right? So daily time frame, daily price movement range, and we just barely nicked that yesterday. So I would say I would not have trending expectation for Amazon. I would not go further out with the date to expiration. This is not a trend. This is not like engaging, say, Apple or Qualcomm to the upside. It's buyable, yes, as long as the candles are green or yellow and the daily price movement range with a very, very, very short-term expectation just to go to the other end of the price movement range. So from gray to gold would pretty much be what I'd be looking at there. Okay. Is it time to take profit on NVIDIA or stay the course? So BLP, I don't know where you're in from. Cost basis is a thing. I don't know what expiration you've got, but if SMH is continuing to move higher, NVIDIA is continuing to move higher, it really, that's going to depend on if you have options and let's say you have Friday expiration. Well, that's going to, got to get off the ride if nothing else because of expiration. But it really does depend on what your cost basis is. So not knowing that, not knowing your time horizon, I would say no, I would not jump off the semiconductor train until maybe end of this month, if, and I think it's a huge if, we start to see any kind of sector rotation. But I'd say right now, if you've got something that's strong and you've got time, play that strong hand. All right, gang, that is a wrap. As always, thank you for being here for Charts and Coffee. I'll see you tomorrow. Yes, tomorrow is a bank holiday, but I will be doing Charts and Coffee. I figured, why not get together for 20 minutes before we go enjoy our day. All right, gang, be good to each other. Until then, I'll talk with you soon.